Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast, where we delve into the world of finance and wealth management. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And today we have an exceptional guest, Elizabeth Flavin Crawford. Elizabeth is the CEO and partner of San Antonio's largest independent RIA firm, Sendero Wealth Management and Sendero Family Enterprise.
Liz is also a vocal advocate for women and passionate about helping them find their financial voice. She founded Sendero's Women and Wealth platform in 2018 and has also co-founded a national group of women CEOs within the industry. Welcome to the show, Liz.
Yes, welcome.
Thanks for having me. I appreciate it.
It's fantastic to have you with us today. So, Liz, you've been in the asset management business working for over 25 years and a partner of your firm since you joined in 2012. Let's start at the beginning. Could you share your origin story? What inspired you with your journey, and what experiences have shaped your path to becoming the CEO of Sendero Wealth Management?
That's a big question. When I started in this business, it was due to someone going out on maternity leave. I kind of grew up in the business and thought I would never be in the business. So let me explain that. My dad was a money manager, worked on Wall Street, was a fantastic analyst, and then joined a firm in Houston that was an RIA, and they managed money. I saw him pace the halls at night. I saw him worry about clients. I saw him want to raise cash levels, and consultants wouldn't let him because he had a lot of institutional money. And I thought, my gosh, why would anyone do that to themselves? And so I went to Boston University, got a degree in psychology, and thought, I'll live in people's minds and I'll do something different. And getting out of school with a degree in psychology and no master's work means you have zero possibilities. So I was working at just an hourly job, and he had somebody go on maternity leave and said, hey, do you want to come fill in for 3 months? And I left 4 years later. I was in the marketing department. Consultants were pretty new back then. And so this was how money managers got their numbers out, their story told. And I just kind of fell in love with the business. There's never a day that is the same as the one before. There's so much to learn. I think of the industry kind of as a slice of a pizza, and every slice is a little different. Money management is very different than asset allocators, but yet your client probably knows very little difference between the two. So the firm I'm at now is actually an asset allocator, and so we pick the money managers that work for our clients. So I've raised myself one level above the stress and the sleepless nights, but it's really a phenomenal business. And the things that we can do for clients, I think, are so powerful that I was just drawn to it. And funny enough, I use my psychology degree every day.
Yeah, well, my mom's a psychologist, so she had every single one of my friends diagnosed by the time that we were like 13, right?
Yeah. You really don't want to know that much about people.
Yeah, I was like, Mom, he's 12. I don't think he has a borderline personality disorder yet.
Right. He's just 12.
That's fantastic. So I'd actually, like to delve into some questions of curiosity here.
Yeah.
Sendero, when did you become part of Sendero, if you don't mind me asking there?
No. So in 2012, I joined the firm. At the time, Sendero was about 1.9 billion. There were 2 founding partners that had been a part of it, and this was their opportunity to do some succession planning. So they invited myself and another gentleman to join and asked a longtime client to become a partner. And so, exponentially it grew in terms of partners. And it was really a great homecoming for me because I had been at a private bank and trust company, and I had built a business that was equal to the size of what they were doing, but I was kind of a stepchild to what they were doing. I was helping large families and institutions find money managers that met their needs, whereas the bank was doing commingled funds, so everybody was in the same investments. And they were going through some leadership changes, and I just thought it was the right time. Sendero was looking for succession planning, and my business fit in beautifully. And so it was a really a nice, marriage of the two businesses. And then we did some reorganizing in 2017, and that's when I became CEO. And we really worked on the firm department by department, making sure we were strong and where we needed to be. And today, Sendero is nearly 6 billion in assets under advisement, and we have 5 lines of business. So we've gone from an investment firm to 5 different business lines, and we have 9 partners. So it's been a tremendous journey, and I think being in this business is just fascinating. There's so much to do.
Let me ask you this: 6 billion. I mean, well, gosh, another reason why RIA database doesn't often give you the correct information, right? How did you guys get there? Did you guys get there through organic growth, inorganic growth? Can you share?
Yeah, it's all organic growth. We have not done any
Wow.
acquisitions. And markets have been great during this time, so that's a powerful force. But then just it's the business is all built on referrals, and it's just trying to do the right thing for every client every day, that gets you to where you are. And so, some of those assets are held at other custodians, but we still advise on the assets. We're still putting the asset allocation plan together. We're still reporting on those assets. But it's a great business, it really is.
And how many total advisors do you guys have there?
We have 6 right now.
Oh,
So
wow.
we only have about 320 clients. So it's not thousands, it's a couple hundred, and we get really deep with our clients. So we know their situations intimately well.
Wow. So, with the growth that you guys have, taken on in just like the last 5 or 6 years, you're saying all organic. You guys, there's no acquisitions of any other companies there.
No other,
That's impressive.
yeah. No, it's like I said, it's fun business. We've opened up an office in Austin, Texas, and Bernie, Texas. We're doing a lot of work in New Mexico right now, and we have clients all over the country. So it's like I said, it's just a lot of fun coming to work every day.
Whereabouts do you live, by the way?
I am in San Antonio, Texas.
Real cool. Yeah, my twin brother lives in Austin. He's one of the managing partners of our company as well. So
very good. It's a huge growth area.
Yeah.
Wow. Well, your firm has undoubtedly achieved remarkable success. Could you share some of the secrets that have been instrumental in building Sendero to what it is today?
Sure. I think at our core, we have always been very entrepreneurial. So we're willing to find a way to make things work. I mentioned we have 5 business lines. We've been an investment firm from the get-go, and it's really allocating assets to different managers. That was the core thesis of the business when it was started. And that was in the mid 90s is the genesis of the firm. It was branded as Sendero in 2008. So it's funny because one of my partners, he's 86 now. He was 60 years old when he decided to, create Sendero in the midst of the 2008 financial crisis. So who doesn't want to be an entrepreneur at 60? So it's in our core. But everything we have done has always been because the client has asked for these services. So when I talk about business lines or services, there are things like investments was the core. Everybody needs their money taken care of, properly run, thought about from an asset allocation. Am I properly positioned? But we had a longtime client who we were doing family office services for since 2009. And when I took over in 17, we thought, wait a second, we've been doing this business for all of these years and we've never marketed it. We've never talked about it. We've never offered this to others. And so we put down, family office services, and we do a phenomenal job there. We started a philanthropy division. We have, maybe a dozen private foundations, lots of donor advised funds. How are we helping these people think about the giving of their money? How are we helping them think about strategy. Most often, I think people create foundations because they have this genuine desire to serve their community, to give back, to see it grow. That community gave them something and they want to return that. And what happens is all of a sudden, the burden of administering a foundation becomes heavy. You become reactive in your giving. Your business may get involved. And so you spend time over there, and your foundation becomes this very reactive, very second thought instead of a forethought, and instead of a tool to use for the next generation. So we put a group together that focuses solely on helping clients think about giving. We use it to train next generation. We use it to bring different branches of the family together to work together. Because when you're giving money away, you're not emotional about it. You're not tied to this is mine. You know that you're giving, and that brings a different mindset. So if you can start to train people about money in that way, then there's less tension and there's less territorial wars about, well, you did this, I did this. It's a great way to get people together. So that was a lot of fun to do, and it's been very rewarding to have that. There are two pieces that I think are really important for what we do. We created a women's program. And again, this was just born out of client needs. Our founder would always tell his friends that he was working with, where's your wife? Where's your daughter? Where's your son? Why aren't they here? And they would be like, no, they can find out about this when I'm gone. And he says, do you really think that's the best way to do this? And so we created a platform to start to educate kids and bring them into conversations and help parents think about ways to talk to them about money. You don't have to show them everything, but let's start to have a conversation. And then in 2018, I partnered up with a woman who had a fantastic education program that we could really focus solely on women. And we had phenomenal success with it. And so it was just so easy to incorporate into what we do. And I think there's a lot of lip service around women, but our firm has women advisors. We have women portfolio managers, which are kind of planners and implementers at our firm. We have women that lead accounting, HR and client service, our compliance. I mean, it's genuine here, and it's a part of who we are. And it's just been in our DNA. And then lastly, I think partnered right with that is what we call our legacy program. And that's about bringing families together and helping them identify what the values are that hold them together, and then create a mission statement around that. And it may sound a little hokey, but it gives purpose to the family. Why are we here? We could all split off and do our own thing, but we're choosing to come together as a family. Why? When you uncover those reasons why, then you've created the purpose for family coming together and the responsibility of coming together and being a part of that family. And it changes the dynamics in a very positive way. And it creates just this open communication, a forum for learning, a forum for respect. It's really phenomenal. And it's a great place to begin to talk about your concerns, strategy, all of these longer term things. And the way I discuss legacy is, in our business, we have so many people that spend time, effort, money on estate planning. How are we going to transition the assets down? And then we do all of that, but we never talk about it. And so the legacy roadmap goes right there with the estate planning. But this is the why. This is what I hope. This is what I want to see from my family. This is the emotional part of passing money down. And I think it's one of the most important programs that we offer. And again, it just all came from the needs of clients and giving them tools to help them navigate their financial lives.
Wow. Did you rehearse that, or did you have it printed up in front of you?
Yeah. Wow. I mean, that's extremely inspiring.
Well, it's really the core of who we are and what we do. But all of that, I just got to say, it's because we've been an entrepreneurial firm. We wanted to build what people need, and we're willing to find ways to make those things work. So it's kind of who we've turned out to be, and I think it's very rewarding.
Let me ask you this out of curiosity. Are you familiar with an RIA by the name of Westwood?
I have heard
Um,
of it. Yes.
yeah, my financial advisor, Leah, who's I've been with for years. She passed. I mean, she became CEO,
Hmm.
and she passed me off to somebody else. And you know, uh, I haven't been really getting along with this new individual she's passed me off to. But I know for myself, I've always since I've had enough money to invest,
Hmm.
I've always myself preferred to have women financial advisors to work with. I think it's I don't know what it is. There's you know I seem to make more money. There's just a better balance, right? Maybe it's because I grew up with my grandmother and mother, and sisters, and but yeah, I know that with that being said, there and building your firm was what was any drawbacks in building the firm? I know that you guys have built it organically, right? Retaining the individuals to work at your organization. I know that there's only 6 of the advisors, but so many TAMPs going on, and that's why I was so surprised at the number that you guys have achieved. There's so many TAMPs going on that pay higher splits, and you know try and recruit your advisors from underneath you. How have you put a stop to that? Obviously, you guys have a great culture. Can you elaborate?
Yeah. So you brought up a few really good points. Sendero is really unique. When we came over in 2012, I said right then and there, I told my clients that I had crafted, created, nurtured for years. I said, "You are my client, but you are a client of Sendero's. You are a client of the firm. The whole point in coming here is because you've got the firm." And so I tell new people all the time, check your ego at the door. We are here to serve our clients, and that doesn't fit with everybody's personality. So if you're ego driven, you stick out here. We are service driven here, and it's an oddity in the business. But I will tell you that I have people who've worked in the industry for a long time, and they come here and they say, "This place feels different." I can't exactly put my finger on it, but it feels very welcoming and it's different. And it's because there's 40 people here. We all work to service the client. And it's not about my client or your client. You are a Sendero client. And we have been able to retain individuals. I just lost one who worked with me for a long time. We were together about 10 years, and he left the industry. He decided he didn't want to be a part of this.
Wow.
But we've been able to retain key talent because of the culture, because we think about ourselves as a team. So I work with 2 other people on accounts. Nobody does anything alone. It's better for the client if there's a team, if there's more than one set of ears listening to things. Um, it's really, I mean, it's very unique. We put the right person with the client. So it's not a, hey, I found that client, I need to service them. It's no, who's the right fit for them? What services do they need? Who's got those skills? Who's going to match up? Who's going to be the best long-term fit for them? And that's all part of our success. Our people are not paid commissions. We're salary and bonus. And
I like that.
yeah, I mean, it's what's best for the client. We don't sell products. We look at portfolios that are based off commissions and products, and it's a nightmare. It's really, really hard for clients, and they don't understand how they got to that point. They don't know how to get out of it. We're, I don't know, a bit of a unicorn in the industry.
Yeah, because you see a lot of these big TAMPs, and they'll have these impressive numbers, where you guys are at, or even some that are greater. And it's funny because when we interview them, we'll say, well, how many DBAs do you have underneath your organization? There's some individuals, I guess. Actually, I don't know if you remember that guy that he had 4.5 billion under management, and they had 70 DBAs. And I was
Right.
like, that sounds like an absolute nightmare. And I think,
Sure
to
it
that
is.
point, too, I mean, correct me if I'm wrong. I know that, they own their clients, and, who really owns the clients. But, ultimately, if that individual wants to leave, they have a better shot of taking those clients than you guys keeping them, because they've only been building their brand. They haven't been building, the Umbrellas brand, right?
Right. Yeah. And we've been able to promote people from within and move them up the ladder. Part of our culture is you've got to be training the person who's going to fill in behind you, because you are going to move up. So we just assume that people are stars in what they do, and that they're going to be expected to grow with their clients and to move along the career path. And it's been a really lovely place to work, because we really do all like each other. We get along. We strive to help one another. There's not that cutthroat, you're not fighting over anything. You're really there to serve, and it creates a very different culture.
Yeah, that's wonderful. I want to talk a little bit about you, Elizabeth. So you're a leader at your firm. Beyond your role in the financial industry, I know you're actively involved in various boards, and you've also spoken at TEDx, which is very cool. How do you balance your professional responsibilities and your commitments to organizations like, being on the board of the Children's Hospital of San Antonio?
A great question. I'm not sure I do it very well. I tell all of our people, work-life balance line is an average, but it really goes like this. It's very up and down. And sometimes work takes more effort, and sometimes family takes more effort. But as long as you're spending the time where you need to, you're going to find success. And that goes with community boards too. Sometimes I'm a great board member, and sometimes I'm embarrassed to show my face. But it's the passion for the work that these nonprofits do that tie people together. So some of them, have terms, and you've got a limited time to make an impact. Others are or more longer term, and it's just kind of a commitment of passion, of something that just fuels you. And so having a balance of what you're working on, and making sure you ask yourself every couple of years, is this important to me? Am I giving it the effort that I need to? Am I fulfilling it for them? Because I don't want to take a spot from somebody else that could be more impactful than me. So it's a constant evaluation, but I think not having unrealistic expectations is part of the key.
I like that.
Okay. And let me ask you this: do you have any of your family members, that work at Sendero?
No, we are all without family here, so it has been a merit-based entrance into the firm. Nobody's kids have worked here. Maybe a summer internship or a stint for scanning stuff into files, but that's about it. So we believe in really finding that best talent out there.
Really cool.
Yeah. And listen, it's good for your kids to go work for somebody else and have to step up to responsibility and to the expectations. And they don't always do that if they're working for you. So it's good for both of us.
Right. Yeah. So looking ahead, the future of wealth management, what does it look like in your perspective? Any opinions on emerging trends, technologies, or, strategies that you see shaping the future?
I don't know that I'm smart enough to tell you what the future of our industry will look like. But if I had to guess, I would say it's going to be more female oriented. More females will control wealth, more females coming through schools. I think it's a great opportunity for them. I think it's going to be more flexible to people's lifestyles. You're seeing in COVID, we had the work from home policy. Now you're seeing companies push people back to the office. What's the right? Well, it's probably a little bit of flexibility. One of the things I am most, I don't know if proud is the right word, but I'm happiest about. March of 2020, one of our employees was supposed to come back from maternity leave. And when we shut the office, we thought, well, it'll be, 2 weeks or so. Oh, surprise, surprise. But the whole time we were all at home, I just kept thinking, I am so happy that new mom is working at her home, and can see her baby all day long, whether it's from the other room or to take a break to go see it. She's going to see the first steps. She's going to hear the first words. She's going to get to do all these firsts that I didn't get to do when I was raising 4 kids. I had to make those sacrifices, and maybe this is an opportunity where people don't have to make all of the sacrifices. And it's a way to retain women in the workforce and a way to give a little bit more to that work life balance that helps people feel fulfilled in their job without burning them out. I think, we're going to see repetitive tasks or matrix tasks that can be plugged will become more automated. AI will have an impact on that. And hopefully that will prompt advisors to spend more time on high impact things like problem solving or relationship building or educating, whatever it is that builds that trust so that their use is highest and best use and not, closing tasks or checking boxes or whatever it may be.
And let me ask you this, you guys have grown to 6 billion. What's the trajectory? What's the 3 to 5 years out, 10 years out? Where do you see Sendero?
That's a great question. I think that we will continue to grow. I imagine that, we'll be at 10 billion in a few years. But what's really important to me is that as we grow, we don't lose our culture. We don't lose the feeling of being able to know our clients, that we are still very much a team, that we have that service approach. I don't want to get so big and so spread out that we lose who we are, because I think that's the secret to our success.
Right.
Yeah, I like that. So have you guys ever been, approached by these wirehouse guys that you wanted to come on board with you? Obviously I would, just by, engaging with you, I could see that you've probably turned down more business than you've taken on, right?
We have learned over the years that while the spectrum of opportunity is large, where we really fit is quite small.
Mm-hmm.
And so we have learned that we are not a good fit for some clients, and we tell them that. Let us help you find somebody to work with, because we're not going to appeal to you, adrenaline junkies, people that want high highs and are willing to take low lows. We just build portfolios that are a little bit more defensive, that can, navigate any market. We're not out for home runs all the time, because you have dry spells in between. And while many people think they might want that, when it actually happens, they don't. So,
I mean, you can ask Kathy Woods about that one, right?
Right. So we're selective in who we work with, because it's good for them and good for us if we are. But we probably get calls from consolidators once or twice a week. I probably get 5 emails a day from people. And we just haven't felt like that was going to be the best thing for our clients. Can that change? Always. But we really drive this firm with the view of what's best for our clients.
Oh.
Yeah.
And we've seen a lot happen in the area. We've got a big company that's come in and bought 2 independent firms here. Kind of wild to buy 2 firms under the same umbrella. But I've watched it, and it was great for the founders, but it wasn't necessarily great for the clients. And so we don't want that to happen to our clients.
Yeah, I've been a client involved in that, and I get passed off, and and it just, to me look, I don't always expect to work with the individual who founded the firm, right? They they got more important things to do. I'm not their highest net worth individual that has I'm not making a dent in their AUM, let's put it that way, right? So but I understand, and after that happens, you're just kind of at that point where it's like, do you want to get your money and go to another company, or have they done good enough to where you're just satisfied? And I think that the way I feel is I'd rather be more than just satisfied. Right.
Yeah. Right. We've put a lot of things in place to really help the clients tell us their needs. And I say it that way because, you know, think of going to the doctor. Rarely do you go into the doctor and say, "Hey, doctor, I have this and I need you to fix it." But you can say, "Hey, my elbow hurts, my shoulder hurts, I've got this pain when I do this." You can kind of tell them where your pain points are. And then you can work to say, "Okay, what's the best way to fix this? Let's diagnose and fix." And that's how we work with clients in a sense, is tell us your priorities. I think our industry is really good at saying, "Hey, how many zeros do you have? And how are you going
Mhm.
to give me your money? I'd like to manage it." And we approach it in a very different way of, what are you looking for and how can we help you? Can we help you? But what are the things that are important to you? And so we have this great process that helps clients articulate what is important to them, what their priorities are, what they want to see happen in their lives. And then we look at the assets that they have and we say, okay, are these two things in alignment? Is there anything we can do to help make these goals, these desires, a higher probability? And that's just the financial planning aspect of that part. But if you don't know what their goals are, if you don't know what is important to them in their lives, what their values are, then how can you drive the assets to fill that, to to fulfill it? Um, I think our industry spends very little time getting to know the client and the client needs. We just assume that you need a 6% return and you're going to be in a growth portfolio. It's going to be a 60-40 or a 65-35, and you'll be good. Trust me. But that's not what clients want. They want to know that you know who they are and that you care about what they're looking for. And trust me, doesn't get very far with them.
Mm-hmm.
Right. And that's where the psychology comes in with it perfectly. So shifting gears a bit, Liz, what investments or sectors currently excite you right now? Any opportunities that you perhaps see as the next wave of wealth creation?
It's interesting. From an investment standpoint, I let our team handle the investments. I know they're, excited like many others about credit and actually having a real cycle again. We'll see. We'll see what that really offers with interest rates where they are and whatnot. But I think it's going to be really interesting to see a return to a more normal business environment. For the last 20 years, so really anyone under 40, you've only known one business cycle. And it's been super low interest rates, a flush cycle of money coming in constantly to help push things forward, very little bankruptcies, lots of
Yeah.
government bailouts on things. And that's not a normal environment. And so it's going to be interesting for people in their careers to find out what a normal environment looks like, and it's going to be a big change. So if people are using a prism to look forward of the last 10 or 15 years, it's not going to work. And what's happened during that time? Well, private equity came in and made people a lot of money by consolidating businesses. Interest rates were so low, they could borrow all kinds of money,
Yeah.
pay big amounts for businesses, make a lot of millionaires, and then 5 years later, do it again when they sold the companies and those funds. Well, at a 7% interest rate, of borrowing, or nine, that doesn't work all that well. You're
Right.
going to have to be so much more careful about the deals, about the price you pay, about all of those things. So I'm really interested to see what happens in that area. That's my caveat, my worry. But on the other side of it, the PE firms are still out there rolling up anything they can. So we've done dentistry, we've done vet clinics, we're going after doctor groups now, wealth managers. I mean, we consolidate as much as we can. It used to be manufacturing businesses would buy other businesses. Now we're in the service providers, and who knows where it will end. But it's going to be interesting for us all.
Absolutely.
And so let me ask you this. So when you say that the PE firms that we witnessed have came in, I mean, I was in the mortgage business, and Ashley was in the mortgage business prior to owning a private equity fund, right? And I was in the business from the age of 16 all the way to 41. And I watched interest rates go from 10% all the way down to 2%.
Yeah.
And, believe it or not, the interest rates were actually much lower than 2%. We were just, without giving up too much information, told that we cannot go below 2% with the yield spread premium. They said, you guys just all make more money right now. We can't have the interest rates go underneath 2%. And it was, that was about the time that I sold my company. And everybody had said to me, why didn't you hang in for another year or two? And I was like, listen, you'll never time the top. You'll never time the bottom. If I was able to get out of the industry and, get in, and I knew I wanted out of the industry too. But yeah, watching that just steadily go from 10 to 2%, and, really on some rate sheets, you could do a no cost loan at 2.25%, and, the bank would get 500 basis points yield spread premium on these. Right. So that's how that was. And I think that was a one-off. So whoever got accustomed to that, I think that that's never going to happen again. And ultimately, I think that, people are waiting for property values to go down. They're waiting for interest rates to go down. They're waiting for something to happen. With, your knowledge of the industry, what's your economic outlook? I know you gave us a little bit of a sample of it in Ashley's last question, but what do you think is going to happen to the market, this the SPY and the Dow and the Russell, and do you think they're going to just kind of keep going sideways until people get accustomed to it, or do you see any black swan events coming up? What's your thoughts there?
So my favorite answer for this is markets will go up and markets will go down.
Fair enough.
What they do in any given year is almost a coin flip, statistically, and experts are perplexed all of the time. I mean, something happens that nobody expected. So I have one partner who says, if you're going to forecast often so that you can change it as things, unwind or come to light. I think what is consistent, though, is over time, markets have more positive returns than negative returns. And compounding of returns is incredibly powerful. So what I tell people is know your numbers. How much do you make? How much do you spend? Invest the excess, have a plan, and stick to it. That is probably the most important piece of information people can learn is create a plan and then don't deviate from it unless your life deviates from the assumptions. Don't panic situationally. We have a chart I think it's 100 reasons why not to invest. And, you read each one individually and you're like, gosh, yes, I mean, that's a reason not to invest. And yet the market has done nothing but climb with a couple interruptions of bear markets, but then the march continues right back up. So there's always going to be headline risk. There's always going to be geopolitical unrest. There are always looming recessions, but you won't make money waiting on the sidelines. So
Sure.
Stay invested. It's often the best solution for a crisis or a great market, And so I'm not qualified to tell you what's going to happen or what's not, but I know that staying invested in a plan that's not too aggressive for you and not under aggressive for you is the best path forward for people.
Thank you.
I know it's a very vanilla answer, but
no, it's the answer somebody like me needs to hear. So,
and listen, I've got clients that react and they're afraid, and I get it. This is your biggest asset for most people, and they're petrified of losing it because most people cannot recreate this. So how do I protect it? Well, the answer is not to avoid, any situation that could cause negative returns. It's to have your plan and stay steady. And in the end, that is likely the best answer in most cases.
Wise words. I think that concludes everything on a great note there. Thank you so much for joining us today, Liz. It's been an absolute pleasure to have you on our podcast. We really appreciate you sharing your valuable insights and your inspiring journey with not only us, but our audience. And to our listeners, thank you for tuning in to another enlightening episode of the What Matters podcast. Stay curious, stay informed, and join us next time as we continue to explore the exciting world of wealth management and financial innovation. Thank you.
Thank you.
Thank you.